Let's welcome on board Gopal Mahadevan, the CFO at Ashok Leyland. Let's talk about what the demand has been in the quarter so far, the CV cycle recovery. Mr. Mahadevan, morning. Demand view has been very strong given a variety of factors. What is it that you would attribute this to? Is it the low base effect? Is it just one-off? Or is there underlying recovery which is for real?
Well, it really looks like there is an underlying demand recovery that has happened, because if you were to look at it till Q2 of the current financial year, we really did not see much growth in the total industry volume. It was actually lower than last year. But in Q3, you saw quite a pullback that has happened, and that has happened in the current 2 months as well. So as I speak, the total industry volume is about 14% higher than last year. And believe me, this is in absolute numbers. If you were to look at it in terms of axles or tonnage, I would say that the total industry volume should be something like about 20 to 21% higher than last year. There's a lot of demand that has come in. There is regulation that has helped it. We're seeing a general economic recovery in terms of infrastructure spends by the government. We have seen rated load applications coming in a lot of northern states, which is actually pushed up demand for higher tonnage vehicles. So, and fleet operators are also replacing, the large ones especially are replacing their older fleets.
Right. LCV growth has seen a very strong uptick of about 60% on a year-on-year basis in sales. What are the key triggers for this demand, and can this really be sustained?
We are very positive about our LCV business. I think they are doing wonderfully well. There has been a smart turnaround that has happened. We're seeing our volumes grow, and I'm really excited about the 7 to 8 product introductions that the company is planning to launch over the next 12 months. So, we are looking at the domestic market. We are filling in slots. We've had the Dost Plus being launched about 3 to 4 months ago. We're doing wonderfully well, and as usual, as as Ashok Leyland does, we are not really kind of doing this through a price mechanism. We have discounting it at all. The guys are selling it. The acceptance from the from the customers has been exceedingly positive. So very, very positive about the LCV business. They have very good growth plans for the next 3 to 5 years.
Now, similarly, the Q3 margins have, or the margin performance addressed to the excessive fear of pricing and discipline in the quest of market share. Can you maintain your margins, and what is your guidance going forward as competition aggression also has toned down?
Well, we are trying to do the business as sanely as possible. Of course, there's a heavy discounting that's happening in the industry. I wish it wouldn't happen the way it is, because now it is, the industry is also kind of looking at a market which is growing. We don't see a necessity at all for discounting. I think in the month of January and February, the prices have hardened a little bit. We have seen the discounting levels come off a bit. But as I had mentioned to you earlier, in our interactions, the policy of Ashok Leyland is to pursue profitable growth. So I mentioned this in relation to our LCV business also. I think we are very, very careful about the level of discounting that we do. Our network is humming. I think the huge network expansion the company had embarked over the last 5 to 7 years is paying us good dividends now. So the demand that we have for our vehicles is not just in the south, but it's on a pan-India basis. So we're seeing a demand for the vehicles across the country. So we are capitalizing on that as well.
Now, you've guided for an MHCV growth of 10% in FY18. MHCV demand remains stronger than expected. Do you think that there are upside risks to your estimates?
Well, we are expecting a growth in the coming year also. That's based on 2 or 3 inputs that we receive. One is that the spend by the government on infrastructure would continue. We have seen that on the outlays that the union budget had. So we do expect that infrastructure spend will kick off further growth in the commercial vehicle. The second one is, of course, regulation. We are seeing that rated load applications are spreading across the country, and if that happens, we would see a lot more higher tonnage vehicles and new vehicles coming in. The third one, I think, is also that the rural demand actually is going up, even as there are challenges in terms of monsoon and rains and agriculture, but we're also seeing that in a larger part of the country there is a firm rural demand, and that would also augur well for the commercial vehicle industry. So overall, if you ask me, I believe that the commercial vehicle industry should grow in the next financial year also. What the percentage is at the moment, I wouldn't know, but we do see the growth happening.
Right. Tell us a little bit about the implementation of the scrappage policy and the latest BS norms as well. In case the norms are implemented by the GST Council, what kind of an upside and demand do you then foresee?
I think it's a very favorable development for the commercial vehicle industry, and I think it has been long overdue. So the announcement that has come in is very positive. They are looking at scrapping, 15-year-old vehicles, vehicles which are over 15 years old, and that would put in a lot more demand in the total industry volume. Our guess is that this should translate, in the medium term over the next couple of years to at least about a year to 2 years of total industry volume coming off as an immediate demand. And every year you would see at least an additional 80 to 100,000 vehicles going off the road because of the age. And the incentive that the government is planning to give, the reports state that they are looking at something like about 5 lakhs per vehicle. I don't know what the final number would be, but that would also act as an impetus for people to do this, participate in this voluntary fleet retirement program.
Right. Could you tell us about your foray in the defense space and what kind of orders are you seeing there? What is the current order book?
Very well. We are going as planned. We participated in quite a number of tenders and won quite a number of them as well. We have big plans for this, for this business. And I have shared with you that as we move forward over the next 3 to 5 years, this business should give us revenues. We are expecting this business to give us revenues of anywhere between $500 million to $1 billion.
Okay. Also, Hinduja Leyland Finance has been doing very well. Any IPO plans?
Well, if there is anything that we should let you know, we will let you know at the right time. There's nothing that I can comment now.
Okay, we'll leave it at that. Thanks so much for taking the time out and speaking with us today. That's the view coming in from Ashok Leyland. Seems like CV recovery has been strong. It's a reality and it's here to stay.